Welcome to Illuminati Silver. We tell you the truth about silver. Today is Monday, the 16th of May, 2022, and we're commenting on the recently released Silver Institute report for Silver 2022. It's a long video, so we'll say no more than just get to it. So let's take a look at the Silver Institute's report and perhaps some of the more important elements that we glean from this report. Now, in their summary, they highlight support from healthy physical investment and a high starting point saw the average silver price rise by 22% year on year in 2021 at an average of $25.14. As mine production recovered from a COVID-disrupted 2020 and industrial recycling was also higher, global supply rose by 5% year on year. Notice that. Global supply rose by 5%. All these people telling you that silver is in short supply and that it's shrinking to such an extent that one day silver deposits will disappear. It's a load of tosh. And all areas of silver demand strengthened, all areas, and that's important too, boosted by a post-pandemic recovery in activity, secular factors driving industrial offtake, and a surge in retail investor appetite for the metal. Three key important points. Demand is up, but so is supply, and there was a high physical investment in silver. Bearing in mind that we've seen COVID, we've seen the prospect of higher rates, and we've seen the Russia-Ukraine scenario develop over this period of time. We shouldn't be too surprised, generally, to see the demand for silver rise. And bearing in mind, of course, during shutdown, production, although rising, demand not so great, although still further up on the previous year. But we can see in a second a big dip in 2020. Anyway, let's just get to this in greater depth. So, mine supply or mine production. 2018, it was as high as 850 million ounces. In 19, it fell to 835. And then in 2020, really, once the lockdown started to bite, 781. Then in 2021, it grew again to 822. The envisaged supply in 2022 is 843, taking us back up to this sort of 3-year average of between 835 and 863. So, mine supply in 2021 is up 5%, and it's expected to rise by 2% in 2022. That's the forecast. Recycling is also up. And in fact, interestingly, recycling has been up for a few years now. Even during the COVID pandemic, we saw recycling rise. And it's envisaged to rise by another 4% this year, having risen 7% in the last year. Net hedging supply, we can include that, but to be candid, I'm not too concerned about that. And also not too concerned about the net official sector sales, because broadly speaking, the overall change in the supply is pretty, 1 million ounces is pretty small. Not for us at home, we'd all like to have 1 million ounces of silver, but as far as the global supply is concerned, it's quite tiny. So the total supply has been, if we take a look, somewhere around just over 1 billion ounces, falling to exactly 1 billion in 2018, then dropping in 19, dropping in 2020 to 953, the lowest since before 2013, rising again in 2021, and envisaged rising again in 2022 to 2030, which will take us to the mean average, really. Now, looking at demand, we can see that during the pandemic, industrial demand fell. We had all these lockdowns, people couldn't get things produced. This should not be a surprise to anyone. It's recovered somewhat, though, in fairness, quite robustly in 2021 to 508 million ounces, and is expected to rise again in 2022 quite sharply. So we've had a 9% rise in 2021, but we've got to bear in mind that's because of the significant fall in 2020, but another rise envisaged in 2022 of 6%. So up, jewellery compared to 2020, small rises. In fact, they're forecasting a slight fall in 2022, perhaps because we had a reasonable rise of 3% in 2021. Not quite sure, in truth, why they envisage a slight dip there. Maybe perhaps people have moved to gold, although with the price of gold being so high, one has to ask, is that likely? Silverware, actually, quite surprising. Silverware rising, okay, still below 2019 levels, but showing quite a sharp increase in 21 and envisaged in 22, 32% and 23% respectively. So in terms of total demand, if we go back pre-pandemic, we're looking at 1 billion ounces falling to 950, then back up to 975, 980, then the pandemic, 880. So we can see the sharp fall there, but a significant demand in 2021, 1,049. But look, as part of the reason for that is this net physical investment. Yes, physical investment. 2018 was 165 million ounces, rising to 186. Then the pandemic hits, goes up to 205, and now in 2021 up to 278. And it's envisaged there won't be much of a change in 2022 for physical investment. We would argue that will be the case, unless, of course, the Ukraine-Russia situation solves itself, and maybe people will start to move out of these safe, inverted commas, safe haven assets and move back into risk-on assets such as equities, and in some cases, let's be honest, cryptocurrencies, both of which are taking a hammering at the moment. And this is underlying, although we're seeing now silver prices falling and gold, they're still being propped up by the very fact that people are wondering where to place their money, and they are worried about the global economic and political situation. So looking at this, we can see that overall, if we look at the entire market balance, we can see that there is a deficit of supply over demand, and that deficit is 96 million ounces. Many of the pumpers will say to you, oh my gosh, 96 million ounces, silver should be doubling in price. No, when you bear in mind that it is envisaged that somewhere, and people will argue this till the cows can come home, there is somewhere between 1 and 2.5 billion ounces of what is generally regarded as fluid physical silver above ground. And therefore any deficit, 90 million, 100 million, can easily be mopped up. So do not naturally expect that because there is a deficit, the price has to rise significantly. Of course, the longer you continue having these deficits over the medium and long term, that is going to drive the price up. That is inevitable. But take a look. Go back to 2013. You can see here, physical deficit of 36 million ounces, and you have the silver price at $23. You had the largest deficit at 258 million back in 2020, but the price was only $20.55. Do not naturally assume the two go hand in hand together. Now, let's take a look at the comments that the Silver Institute, which represents the major suppliers in the silver industry. Among silver's physical demand segments, special mention is due to physical investment, which rose by 36% in weight terms and even more so in value terms. While the social media fueled silver squeeze in the early part of the year no doubt contributed to these gains, it was by no means the only factor. Now, even the Silver Institute is admitting, and we talk about price manipulation by the banks, there's a degree of price manipulation by social media, The people we regard as the pumpers, who keep frightening everyone by saying, oh my gosh, the mint has run out of silver eagles. That means there's no silver available. Grab it now. Grab whatever you can as quickly as you can before it all disappears. And then, lo and behold, a few months later, supply comes back. But during that intervening period, premiums rise exponentially. And this is how the silver investor is being both manipulated and, in our view, conned by those with a vested interest in stating there is a shortage, buy it now, buy it now. Just think when premiums were $10 per ounce, and in some cases we even saw $15 per ounce premium for pretty standard coins. Well, you'll see now, you try and sell those coins and see what happened when you were paying $40 for a silver eagle. You have to find someone like you or me who've bought those, although we didn't, who bought those, who equally believe that narrative. Just beware. We're all being manipulated by all different influencers, and social media is one of them. However, it does say, indeed, silver bar and coin demand proved robust even after that rush had dissipated, underpinned by retail investors' concerns towards political and geopolitical developments, negative real interest rates, global market risks, and the looming spectre of inflation. This created tight conditions for silver investment products which remain in place. Once you get 3% rates, you'll still technically have negative real interest rates, but if inflation comes down to 4% or 3%, which eventually it should, and that will be aided and abetted by the Russia-Ukraine situation being solved, because then oil prices can come back to normal levels, then perhaps the demand for physical silver from an investment point of view will reduce. And we think over the coming months that is going to happen. Now, on the industrial side, that could be a different kettle of fish. Professional investors, in contrast, were less keen on silver for most of the year. Now note that. Normal retail investors like you and I, very keen, very taken by this silver squeeze. But professional investors were less keen. The attitude was not unique to silver. Appetite for gold was similarly lukewarm. We believe that this was due to unfavorable expectations for key macroeconomic drivers, interest rates and yields in particular. As these were already extremely low, investors struggled to see them falling further. Crucially, from mid-year onwards, growing concerns about inflation and signals from the US Fed of a change in attitude fueled expectations of policy tightening, which further damaged appetite for precious metals. The effect of silver's earlier success also did not help institutional investor appetite. Silver's price had, after all, staged a strong rally in 2020, and the boost from its green credentials started to appear a little overdone. Whenever we comment on silver, we get a lot of criticism because people say, oh, you're negative, you're negative. But the reality is we're not looking at this necessarily ourselves from us going down to the local coin shop and buying a silver coin. We love silver coins. We love gold coins. But we're looking at this from a macro level. We're looking at this from a professional investor level. We're looking at this from an institutional business level, where major companies like Apple place their order for silver very often a year in advance, and sometimes up to 3 years for some companies, to ensure and guarantee their supply. And yes, this has short-term effects on prices. But when you see institutional investor appetite waning, then that should give you a guide, because you have to follow the money, and they're the people with the money. That's what's moving to some degree the price. And of course, the paper price too has an effect. No one doubts that because of the size, because of the leverage on the paper markets. We are looking at what institutional investors do, because that will ultimately, rightly or wrongly, dictate the price of silver moving forward. Now, all this saw silver move from trading within a $24 to $28 range for most of the first half of last year to fluctuating within a 22 to 26 band. Still, the full year 2021 average managed to achieve a 22% year-on-year increase to a 9-year high of $25.14. Will that continue this year? Well, have a look at the silver price now. It's nowhere near that. And some people are talking about it falling sub $20. Turning to 2022, since Russia's invasion of Ukraine in late February, the conflict and its implications on trade and the world economy become a principal driver of global market moves, and silver's been no exception. The few weeks leading to end of March, when this report was being finalized, have seen wild fluctuations in silver price, strong inflows of its speculative funds into futures positions, and another explosion of retail investor interest in silver bars and coins. Similar to past geopolitical events, Metals Focus believes that the boost to precious metal prices from the war will prove short-lived. Price moves over the past few weeks, the brief nature of the spike in particular, lend some support to our view. Once this support wanes, silver's traditional macro drivers will once again take center stage. Among these, we believe that US monetary policy will dominate. Focusing on that, we believe that the current market expectations of as many as 8 to 9 hikes by year end, based on the latest Fed funds futures prices, are far too aggressive. As these are adjusted in the near to medium term, gold and silver should receive some support. Eventually, though, as policy rates rise and the impact on real rates is amplified by inflation easing towards the end of the year, pressure on silver seems inevitable. Bottom line is, we can expect at some stage during this year potentially even lower silver prices. Whether that's going to come over the next few months as the rates are being applied, or whether that's going to come towards the end of the year once the rates have been applied, remains to be seen. We suspect prices are going to gradually dip over the coming months, and especially as there appears to be some form of, shall we say, reduction in the Ukraine-Russia situation, in which case, as that geopolitical concern dissipates, then really the pressure on certainly the investment demand for silver and gold, the same will apply to gold, will also dissipate. Now, naturally, if it heats up and we see potentially a biological or nuclear war, then of course all bets are off and prices will simply potentially go through the roof. If you were to ask us, are we excited about silver's future? The answer would be confident rather than excited. Excited suggests we're going to see prices go to the moon. We don't envisage that. Silver is a long-term steady investment which over time will pay dividends. Will they give you the percentages that people gambling on cryptocurrencies and in some cases on equities will give you? No. But you're looking really, and those who invest in silver should be looking at long-term appreciation, a degree of inflation proofing, and confidence in the fact that silver demand is gradually rising and the industrial prospects of a green energy future could be quite exhilarating for silver's potential. Do we see it skyrocketing to $100, $600 as some pumpers announce? No, we don't. But we can see silver, even if it dips below $20, over the long term, we'll see that average price, in our view, it's not financial advice, but in our view, gradually rise. What are your thoughts? Do share them. It's a long video. We're sorry for that, but we wanted you to get a flavor of our appreciation of the Silver Institute's report. Thank you so much for listening. Please give us a thumbs up, subscribe, press the bell sign. Until our next video. Illuminati silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.